And hope you're, yay, it's Friday. It's the 12th of November. So here, just to quickly run through, move my chair out of the way, just to run through the numbers. What are we seeing for the day over on S&P, crude and gold, and what potential trading opportunities are there, if any, right? Keep it super simple. It's the same thing every day. If you guys haven't noticed that, it's the same thing every day because that's what trading is. If you want to have an edge, if you really want to be able to be successful over the long term in trading, you've got to do the same things every day. If it's too exciting, it's exciting because you're creating some sort of an adrenaline rush by taking an unnecessary risk. That could be too large of a lot size. It could be trading with emotion. A lot of other things are going on psychologically behind the scenes that give you that dopamine rush, which is counterproductive to successful long-term trading. All right, so get boring. Just do the same thing every day. All right, this will get you on the right path. I can't guarantee anything because you can't guarantee anything in trading, but if you can follow the process, it will get you consistent results. What are we doing over here? So S&P, first thing, S&P, we've got a mixed bias. So we're not doing anything with the S&P. 4-hour bias, the really, because look where the trend's been, right? Giant upward bias. 4-hour bias is long. 30-minute bias is short. That's telling us, hey, we've got a mixed bias. Let's just stay away from this thing. It doesn't know what it's gonna do. We're coming into Friday. We've had a few down days that, just could potentially rally up a little bit over here, but you don't want to place your bets on that. You want to place your bet on something quantifiable, which is how the market's moving. And right now, since we don't have any definitive direction based on some quantifiable means of measuring that, which is our two different moving averages here. So long, we got the 4-hour with our moving averages, we got the 30-minute with moving averages. They're mixed. Don't do anything. All right. Over on crude, we have a short bias now. So this is rolled over. Our 4-hour bias has rolled over, and our 30-minute bias is also looking to go short. So we've pulled back quite a bit here on crude. Remember, we're up here at 85 and change. Now we're down here around 80. So what we're watching on crude is we like to see the market push up a little bit, maybe get up here to around 81 or so, and then we'd like to see it break back down in the direction of its current market bias. So we want to see higher lows and higher highs, just like we'd see here, right? Higher low, higher high, higher low, higher high, and then we want to see it break back down in the direction of that current bias, which is short, all right? And then over on the gold side of things, we are looking for long trades. It has floated back a little bit. Yesterday, we did have a potential opportunity here. We made the the lower high and lower low, lower high, lower low. It did break back out, but it didn't give us enough momentum. It just went and it just kind of fizzled out right here and didn't go anywhere. It has since broken down a little bit, which is great. We're seeing lower highs, lower lows. We'd like to see it pull back a little more this morning and then break back in the direction of its current bias, which is long, to take a long trading opportunity there. And that's all there is to it, guys. That's all we're really needing to watch. We look at that basket because they're related at some level, but they also move independently of another. So, we're looking at that basket of trades, the basket of instruments rather, to see if we have tradable opportunities. Sometimes if we don't see one in one place, we'll find it in another. So that's what we're doing here, and it's worked out well for us over the course of the year that we've been running our model portfolio. So if you're trailing along with that, tracking that, we'll do another model portfolio update here at the end of the month. Right now, we're on track around 75% for the year in that model portfolio if you're following just the BTX method. So keep that in mind, guys. It's not exciting, it's repetitious, but it's also quantifiable, and it gives you the right risk to reward where you're risking a smaller amount than you consistently win. So you're losing less than you typically win, which gives you that positive expectancy over the long term. And that's what trading comes down to. Mindset to take your trades the same way every time, every day, and then a risk management strategy that allows you to win a greater amount than you lose. Put those two things together, you can flip a coin and make money trading. No one wants to do it, but it's true. I've proven it over the years in multiple classes when I was doing group coaching and personal coaching. We'd see it over and over. We'd get a group of guys and we'd say, hey, we're gonna just flip a coin every morning. We're gonna pick up a currency pairing, we're gonna flip a coin, we're gonna do what the coin says, we're gonna use good money management. And over a breadth of 100+ trades, we'd always end up positive. So take that to the bank. Anyway, I'm going off on a tangent. I'm gonna leave it here, get off of this. You guys get on with your trading day. I'm gonna get on with mine.